The first debt. You don't remember deciding to go into debt? That's the thing nobody tells you. There's no moment where you sit down, weigh the options, and choose this. It happens the way most consequential things happen. Gradually, then all at once. A form, a signature, a number that doesn't feel real because you haven't earned it yet. The first debt is always small enough to feel manageable. That's by design. The system doesn't hand you a $200,000 obligation on day one. It hands you a $500 credit limit and a due date 30 days away. You pay it on time. You feel responsible. The limit increases. The cycle has already started, and you are treating it like a reward. Every person who has ever been buried alive under debt started exactly where you are standing right now. Not afraid, not cautious, not suspicious of anything. Just moving forward with your eyes ahead, the exact way you were told you were supposed to. The signature dries on the page. The clock starts without ceremony. The number that felt too small to matter begins doing its work. It is patient. You are not paying attention yet. Level 1, consumer debt. The interest rate is 24.99%. You saw it in the fine print. You signed anyway. Everyone does. At level 1, debt doesn't feel like debt. It feels like access. The jacket, the trip, the dinner you put on the card. Because payday is 6 days out, and the moment is right now. The minimum payment is $35. You make it every month, without missing once. The balance barely moves. What you don't see is that $35 covers almost nothing but interest. The principal sits there, compounding at a rate specifically designed to extract years of payments from a debt that took minutes to create. Buy now, pay later makes it cleaner, quieter, nearly invisible. No card, no swipe. Just a checkbox at checkout and 4 installments that begin stacking across 3. Different apps until you are paying for a couch, a phone, and a winter coat simultaneously with money that has not yet arrived. Nobody sat you down and explained in plain terms what 24.99% does to $3,000 over 18 months. The answer is $754 in interest charges, stacked on top of what you already spent. You bought something twice and received it once. The balance resets. The limit climbs. You spend again because the mechanism is frictionless and the consequences are deferred and deferred. Consequences never feel like consequences at all. That is the design. Not the flaw, the design. Level 2, student debt. You borrowed $47,000 to become a version of yourself that could earn it back. That was the agreement. Not written anywhere enforceable. Just understood. Implied by every guidance counselor, every university brochure, every parent who said the degree was worth it, because it had been worth it. For them, in a different economy with different entry-level salaries and a cost of living that has since tripled. You graduated. The job came. It paid $38,000 a year before tax. The repayment plan activated at $480 a month. You do the math one night on your phone lying in the dark and realize you will be paying this until you are 41 years old. If nothing changes, the degree is real. The credential is framed on the wall. The knowledge lives somewhere inside you. But the version of the future you borrowed against, the one with the salary that made the loan feel rational when you were 18 signing paperwork, you did not fully understand. That version keeps receding further with every passing year. Income-based repayment stretches the term. Forbearance pauses the clock, but not the interest. Deferment is not forgiveness. It is postponement with a compounding penalty built into every month of delay. You are not falling behind. You are treading water in a pool that is slowly, quietly, methodically getting deeper every single month you stay still. Level 3, car and asset debt. The monthly payment is $520. You calculated it before you signed. You decided it was affordable. What you didn't calculate was what the car would be worth in 4 years, which is $11,000 less than what you still owe on it. You are underwater on a depreciating asset you need every morning to get to the job that pays you enough to keep paying for it. This is level 3. This is where debt begins to masquerade as ownership. The title has your name on it. The bank holds the lien. There is a meaningful legal difference between those two things, and most people never stop long enough to examine it closely. Asset debt convinces you that you are building something solid. The boat, the second vehicle, the home theater system financed at 0% for 12 months, which converts to 28%, retroactively applied if the balance isn't cleared by month 13. You own the object. The object does not hold value. What holds value is the bank's ongoing claim against your future income. You traded time you have not yet lived for things you are already fully used to having. The asset depreciates on its own curve. The obligation does not follow. The gap between what it's worth and what you owe is called negative equity. You live inside it without ever having a name for what it is. Level 4, mortgage debt. Society calls this the responsible debt, the one that signals you have finally arrived. You signed for $340,000 at 6.8% over 30 years. Do you know what you will actually pay by the time it is finished? $808,000. You will pay $468,000 in interest alone on a house that was listed at $340,000. The bank will earn more money from your home than the home originally cost to buy. And still, this is the debt people celebrate with champagne at the closing table. Because the house appreciates. Because at least it is not rent, disappearing into someone else's account every month. Because 30 years from now you will own it outright, which is entirely true, and which will matter enormously to a version of you that is 29 years older and has spent 3 full decades maintaining, insuring, and paying annual property tax on an asset. The bank held a legal claim against the entire time. The house is not passive. It requires you to keep earning, keep paying, keep staying solvent, or the institution that financed your arrival takes back what it technically never fully released to you. You don't live in a home, you live inside collateral. The distinction is legal and precise. The feeling, if you sit with it long enough, is something else entirely. Level 5, business debt. Friday is 3 days away. Payroll is $84,000. The business account holds $22,000. The line of credit is drawn to $140,000. Someone in the bank has made it clear they will not extend it further until they review last quarter's financials, which you have not submitted because last quarter is not something you want anyone examining closely right now. This is level 5. This is where debt stops being a personal burden and becomes a moral weight you carry on behalf of other people. Because now it carries names. The woman who has managed your accounts for 4 years without a single error. The guy in logistics who has a daughter, starting school in September, and has never once been late to work. You borrowed to build something real. The business is real. The revenue is real but inconsistent. And the debt is real and arrives on a fixed schedule that does not adjust for inconsistency or effort or circumstance. Business debt runs on a different clock than personal debt. It does not wait. It does not respond to your intention or the hours you have sacrificed. It compounds against your credibility, your vendor relationships, your ability to lie still at night, without numbers running behind, your eyes in the dark. At this level, you are not managing money. You are managing consequences that carry other people's names on them. Level 6, systemic debt. There is a level of debt you will never personally hold, but will spend your entire working life paying for in ways you cannot trace back to a single decision or a single signature. The United States carries over $34.5 trillion in national debt. Japan's debt-to-GDP ratio sits at 255%. These figures do not live inside a government spreadsheet. They live in the interest rate attached to your mortgage, in the inflation that steadily reduces what your savings can purchase, year after year, without a single announcement. In the policy decisions made in rooms, you will never enter by people who do not experience debt as pressure, but wield it as a precision instrument pointed outward. At this level, debt is not desperation. It is architecture. Sovereign debt funds wars, infrastructure, and political survival across decades. Corporate debt funds share buybacks that lift stock prices while the underlying company quietly hollows its own foundation. The people operating at level 6 did not borrow because they had no option. They borrowed because debt at sufficient scale stops being a liability and becomes pure leverage, moving risk outward onto the system while pulling every return inward toward very few hands. You are load-bearing inside that structure. You did not negotiate the terms. Nobody asked. The exit or the loop. Some people get out. That is true and worth saying directly. They consolidate the balances. They negotiate the rates. They earn more and spend less and execute with the kind of sustained discipline most people maintain for about 4 months before the weight of living an actual life breaks. The structure open completely, but some hold. The debt clears. The number reaches 0. And then, because income is still unpredictable, because costs have continued rising without pause, because a single emergency arrived without scheduling in the shape of a hospital bill or a broken transmission or 1 month, where every obligation landed. Simultaneously, the cycle reopens. Not for everyone, but often enough that the financial industry built a clinical term around it. Re-entry. You exit the debt. The debt does not exit the system, still waiting for you on the other side. The 24.99% offer arrives again in your mailbox. The 30-year mortgage remains the default structure of ownership. The student loan is still the assumed price of becoming qualified for the future you were promised. The checkbox at checkout remains one frictionless tap away. You started this with a signature on something that felt far too small to change the direction of anything. That is how it begins for everyone. That is how it begins every single time.